Happy Tuesday, just after 3 p.m., final hour session. A little bit of active trading today. Markets found a way to claw back from the sell-off this morning. We dropped down to a nice floor around 62.80, discussed in my daily profit plan room. We had a couple trades work out today. I am looking at some net profit. I had a 60-cent winner, a 90-cent loss, and a 3.95 winner today. Net percentage-wise, 54.5% winner, 10% loser, and a 197.5% winner on the day. I will certainly take that, and nice little profit overall. So I could sit here and, I actually am going to watch for the rest of the day. I'm curious where the rest of this goes. This is a look at some of the trades I built out for today. This gets us into the final bits. So 309, let's go back to current price and current time. So this is now around 309. The trade that actually is going pretty well is this one, and I end up closing this one out for about $400. So the pin price is between 63.15 and 63.20. We're trading right now at 63.12. So I'm in like the ramp up of this trade. If we get to 15 or higher, this potentially has the ability to close out for about $800 or $900 profit. We get all the way up here towards the close today, the final, and this is what's tricky about these trades is right now it's 3:10 p.m. Okay, so I have a good chunk of profit. I mean, honestly, this trade was only down about $90. This trade is up about $400. I'm taking the winner. Okay, if I want to wait longer, price has to stay. If price can stay, let me use this drawing tool here. What is this crap? I don't know what this like short, medium. I don't even know what this is. I think it like automatically turns off my tool. There we go. Okay, so we're trading around 63.13, which is right around here. Okay, so if I go straight down based on current price, that's about my profit as this trade is built out. So I have risk in the trade. If I am, over here, if I'm over here, there's risk and there's risk. If I'm over here, there's risk and there's risk. Right now, I'm sitting in some profit. The greedy side of me would be like, hey, let's ride this thing out and let this thing cash settle at the top of the hour and see if it's perfectly placed between 63.15 and 63.20. Maybe it is, right? Maybe it's right around that pin price I talked about this morning at 63.15. I had two pin prices. This would be a 62.95 and this was a 63.15. Okay. So I can guess and hope in the next 50 minutes that price is here, and this allows time to work in my favor. And as time continues to unfold, you can see that the green zone continues to climb because there's less and less time to trade. And it's really the final, 20 minutes or so, any type of, full expiration, zero DTE type stuff, butterfly spreads. This was an iron butterfly strategy. You can see here that it gets exponentially faster as it closes in those final 20 minutes. And you can also see that the risk does the same thing. The risk is going to fill up this bottom portion, this dead zone, and this dead zone. But if I'm right in my profit traps, those final few minutes give me a nice little chunk of profit. So right there is, about 80 to 90% of max profit. This one would have been able to give me about $400 profit today. This one about $900 profit today. I got to take that back, about $800 profit today. And then I wait all the way to close. And then I'd have to see, if this thing were to settle between 63.15 and 63.20, that's a perfectly pinned trade in that little $5 zone. That would max me out around $800. This one would be a perfectly max zone around the way I set up the trade earlier this morning. It would have been around $300. So, but there's dead zone left and right. So if I'm not spot on between this 5-point area and this 5-point area, I still have some profit traps, which is nice. I have about 10 points to work with on either side. This one I have about 5 points to work with on either side. So this gives me, roughly speaking, about a 10-point sweet spot to catch some of this profit trap. And this one gives me about a 15-point sweet spot to work with the profit trap. So it's workable, but the risk that to me is not worth it is if I'm right, it's awesome. If I'm wrong, it's just so easy for price to slip through my trap and not settle at a profitable spot for me. There's risk here, right? I'd be losing money here, I'd be losing money here, and I'd be losing money here, right? So, we'll see where it settles. But the nice thing is I'm out for the day with over $300 credit per contract, and that's pretty good, and I'll take it, right? Luca, what's happening? Donna, good afternoon. Nice to be with everybody today. I'm going to take these winners. We had our daily profit play work out well today. The trade from last Friday, I took a manageable loss on. The reason I did that is I wanted to take these trades. I thought I could have more flexibility, more workability. Looking at today's floor and ceiling or pin prices, taking a look at these liquidity levels. So the market did use the floor. We talked about 6,300 to 6,280 today. And that 80 level did stick pretty nicely. So we've got the kind of natural reflexivity. The guardrail trail is on again. I keep saying this. If you're interested in learning about some of this, day-to-day stuff, if you're learning, from day to day, week to week, month to month, I'm only 2 days into this. Everyone can join me for these daily profit play sessions, daily profit plan sessions. I run this room now every single day, Monday through Friday at 9 a.m. Eastern time. You're all welcome to join me. I will make this so in the Zoom room. You can join me through Zoom. So the links will be available inside my Telegram channel. So I'll post that link at the end of today's session. If you'd like to join me for Telegram, okay? So I'm live here for this final hour. This is my profit on the day. I'm hitting fresh highs again in the portfolio, which is good. Up by another $28,000 this week. And honestly, I mean, the gains are coming from a little bit of time decay, coming from a little bit of covered calls, coming from a little bit of gains. Snapchat was up like 4+% today. That was a good one. I've got some shares. Gold is up. That's helping my GLD positions. SLV is up. I rolled some calls today on SLV. JD is up. China's up. I've got some recent highs on FXI, KWeb. All these kind of China plays looking pretty good. So anyway, just wanted to highlight a little celebratory all-time high for the year. Again, not bad. Trying to think what else. Daily profit play, talked about that. This is the 54.5% winner that we took this morning. This trade was posted and closed out about 11:45, so it took just over 2 hours from the open. Not too shabby. And then, like I said, I'll share this link, so you'll have a link to join every single morning. This will pop up. I'll share my Telegram channel, so every day, probably around 30 minutes prior, you can jump into the room. I will start the session at 9 a.m. Eastern time, and we'll get to work. So I'm really looking to build this room up with an attendance of traders that are wanting to learn. Right? I'm going to trade, and I will teach. If you want to learn, this is a great place to do it, and I'm doing it for everybody. So yes, I have services that I run. Yes, I have memberships and alerts and things like that. But this gives me a nice uninterrupted block to trade with everyone for about 2 hours, and we can just talk the markets, right? So we can talk short term, medium term, long term. We can go through some strategies. I have some notes today. I will share that right here, actually. So notes today would be, we did this one. We talked through long calls, long puts, calculating break evens. My lesson today was finding break evens. Let me see if I can look at I'll give you a sneak peek here. So today is Technical Tuesday. That's what we discussed. And then the lesson for the day was finding break evens. All right. So that's what we talked about this morning. And these are the notes that I have references for. So if you're in my daily profit room, you can ask me and I'll be able to share these. I do have these saved. Yesterday, we talked about guardrails. So the market starts out, at the money, opening bell, identifying some levels that the market's likely going to stay within, calculating the highs and lows of the day based on the VIX and the current VIX. One thing that's interesting is you have a lot of volatility suppressive funds out there that just sell vol, sell vol, sell vol. And when the VIX is above 19, a lot of this buying power stops. So rather than being short vol, they tend to hold off. They tend to expect volatility to basically rally, and we go from 17 to 19 up into the 20s. That's why a lot of times when the VIX starts to appreciate and it goes up over 20, that's why 20 to 25 is not that hard to get to. That's why 20 to 30 is not that hard to get to, right? That's why 20 to 30 plus is not that hard to get to. It's the scary times when the VIX spikes up to 35, 40, 50 that happens, but it's because these vol suppressing funds all of a sudden just basically pull the plug and they stop suppressing vol and they get out of the way and let the thing rip. Okay. So anyway, guardrail trade notes there. I've got that saved. Today we talked about long calls, long puts, and calculating your break even. If you buy shares and add covered calls, identifying what you're making on the trade, whether you're at the money, out of the money, in the money, credit spreads, debit spreads, calculating break evens, and understanding you've got to define risk, upside and downside. So all this is good. Okay, Luca, there's only one me on Telegram. I hate to say it. I don't know what else is out there for Chris Pulver, but I can promise you this. I'm on one Telegram channel that is out for everybody. So, yes, I have my daily profit play room that I run these alerts. Yes, I have my, let's see here. This is all noise. Project Options Edge. This is my discretionary service that I run as well, and also in my pinch point scanner. Okay, so this is where I'm, showcasing pinch point scanner. We'll talk about this more actually tomorrow because it's watch list Wednesday. So there's my pinch point scanner. There's my Project Options Edge. I run these Telegram channels, but my broad public facing, if you want to find me every single day, I'm posting comments in here in my Telegram channel. I'll share that link at the end of today's session. Also in my Discord, which I'll share as well. Chris Pulver Trading. Look, I know there's a lot of impersonators. I know there's a lot of scammers. Nothing I could do about that. You know how to reach me. I'm here every day on YouTube. I'm here every day in my live sessions. You can participate. So there's no reason to think like, oh, Chris contacted me on WhatsApp. No, I didn't. Chris contacted me by text. No, I didn't. This is where you're going to find me each and every day. I think that's fair, right? Somebody that's out here doing this, live with traders for the last decade, there's bound to be some impersonators out there. Okay. Lucas says my winner today is silver. Excellent. Very good. Yeah, let's take a look. Let's look at the heat map today. So let's go FinViz. Let's look at the heat map today. 67% of stocks advancing, 29.4 declining. We have the heat map looks pretty interesting. Look at AVGO finally pulling back a little bit. Look at Oracle, 2.69 to the downside. AVGO down, Nvidia down. Again, I'm surprised the S&P has actually hung in there, but the reason why is finally we actually see like the broader market in green, and the big ones, the Microsofts, the Apples, the Amazons, the Nvidias, the AVGOs, that's over $1 trillion, right? Nvidia, $4 trillion, Microsoft, $3 trillion, Apple, $3 trillion. Tesla up today. Tesla has earnings tomorrow. Google has earnings tomorrow after market. Netflix down 3%. Coinbase, I want to take a look at Coin. I don't know if it's on here. But 67% of stocks advancing. So the market stayed in there with some resiliency. Floor of the day around 62.80. It was not quite at the highs and lows I calculated based on the VIX. The VIX today, let me go to my, so we were up this morning on the VIX to 17.48 and then retreated the rest of the day. So, again, I would say some trickery on the VIX because it starts out showing some risk off tone and then that just gets faded all day. So the market, what does it respond to? Well, this is the start of the day right here. So the start of the day was right here. We opened up, we had a nice 15-minute sell-off this morning, and then the market bottomed, and it's been grinding all the way back. That's where it's at. Were you able to get out of uranium trades? Yep, I closed it out. That was out for Project Options Edge. We closed that one out at the highs. So I had like a $39 credit, or I guess a $39 price position. I closed out a diagonal spread for profit, and I closed out a share. I closed out, I don't know, 2,000 or 3,000 shares worth of uranium. I've been participating in this one since 2022. So this wasn't like, oh my God, what a great trade. I timed it so well. I've been in this thing since the support here around $19. So I measured this move. Right there is my symmetry around $42. We got up to $41.50. Close enough. So swing, pullback, measure symmetry. And honestly, if I move this just a tiny bit lower, look at how almost perfect the symmetry is. Look at that. So I'm going to the top of this box, and price was right there before we peaked out around $42. So I'm happy at 40. I think that was a great trade. 39, 40 bucks. Happy with that trade. That was a crazy good push. That look, I wasn't super excited. I had uranium long here, had a nice chunk of profit, added in more at this low, added in on this break of the trend line, and I still had target one. So this is target one, and this is target. I guess I'll put target one, target two. So this is target one. This is target two. So this is 1, 2, 3. I think any type of pullback in here that is meaningful, I think still has the legs to get to a wave 3, which would maybe be up into the 50s. If you want to participate in uranium, it's going to be volatile. I will say that it's probably going to be volatile, but it could be a great trade up into the 50s. I still think it's a good trade to have some legs in it. But if I were to buy shares, I'd want to have a collar trade where I buy a put, sell a call, or just buy a put for protection and go out of the money and make it really cheap. Because the upside appreciation of about $20 is going to cover any type of insurance you put on it. If you just buy a put, protect that thing out for 6 months and make it cheap. But if it goes up $20, I can sacrifice 50 cents to a dollar on that put and give it up and still take a huge gain if it hits that fifth wave. That makes sense? How am I calculating symmetry? Easy. I just measure from low to high. So this box right here, I started from this swing low. Okay. So I just box it in. I take that swing from low to high. So I'll circle this. I swing low to high, and then we pull back. So this to me is all a big wave one. Pull back in here. This is all a wave two correction. And that symmetry projection is I just take this measured move and I copy and paste it and I throw it in with the wave two pullback. Okay, so wave two pullback goes right in here. That's how I measured it. And I do this in currencies, I do this in futures, I do this in stocks, I do this in indexes. I've had a lesson on this. We talked about this in these sessions, this final hour session. The notion that A to B equals C to D. So an AB swing or a push, A to B equals C to D. That is one of the best phenomenons in the market that I can see because it's a mirror image, right? Markets can hit symmetry. Everyone's like, oh, the big extension, the big fib extension. Well, yeah, it's way the heck up here, but that's not symmetry. So if the market can hit symmetry, look at how quickly it got there. Like it was clearly destination AB equals CD. It just did it way faster. And that's why if you're in a wave one or in a wave three, those profits are crazy, right? Like they happen so fast. Wave one is found at support. You've got to be a little bit anticipatory if you're trying to find a wave one. But if you're at the downtrend, 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 eventually you find a huge level of support. If this market goes 1, 2, 3, there's so much money that can be made there, right? You go 1, pull back 2, push wave 3. That's an awesome way to have a way to find support, dollar cost average in, have a swing, take out some market structure, break some trend lines, and a simple 1, 2, 3. Also, if you look at this from the bigger picture, if you took this fib, let's say from high to low, and you try to look at this as pulling back to something really reasonable, pull back to the 382, pull back to the 50, find some market equilibrium. Make sense? So finding support is a great spot to identify wave one and then look for a 2, 3. You want to trade that wave 3 to make a lot of money. If you flip this around and you're a bear, markets are up, 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 up. Eventually, the structure changes and we have a 1, 2, 3 wave correction. Okay, I oftentimes don't see on the downside, especially in the stock market, we don't see a lot of 4 and 5 wave corrections. We see like 3, right? So it's going to be 1, 2, 3. If you're short on something, get out around that third wave and expect this trend to find some bottoming, and then the trend resumes. That sometimes is all it's offering. Make sense? A bit too volatile. Yeah, I don't blame you. I mean, like I said, I'm out of the trade. I'm not really looking to participate in uranium. At this point, I traded it. I've been in it for 2 years. It paid off really nicely, and I'm good. I mean, I can speculate on uranium. I think natural gas is probably a better trade, to be honest. I think natural gas is going to be a better fit for this whole AI build out, this whole data center, all this energy that everyone's talking about, this need for AI. There's going to be supply chain bottlenecks. I think that we expect the world to be so easy with AI and everything's going to be fantastic. I think we're going to run into a lot of energy constraints. I think we're not going to have the capacity to fuel these data centers and service these data centers with energy like we need to. I think energy is going to get way more expensive if we're not careful. So hopefully, supply side is really like robust, and that way we can have weaker prices. We want lower prices on energy to help, but if it's like 10,000 times the computing power, that's a lot of extra money, and that might eat into these profit margins like crazy if we're not careful. So anyway, I imagine the Iran stuff caused a good. I mean, not necessarily. It was a bit of that, yes. But most of it was also this look into AI, this look into building out data centers. What sources of energy can we look at? It's not just oil, right? Like oil obviously had lots of volatility with Iran, a lot with Israel. right? The Middle East has always been a hot spot. So, OPEC and what they're going to do with supply and demand, all these things are manipulated. Oil is super volatile. So natural gas has had some movement this year. Nuclear, I mean, you see nuclear stocks doing really well. You see uranium doing really well. But I think as I got the trade that I wanted, I'm kind of done with this trade. If it pulls back, I might take a stab at this thing back in the low 30s. But if I did it, I would buy the shares and I would buy a put and I would probably sell a call and I'd finance that thing. So that way it's like, I'm not saying it's risk free because obviously if price goes back down, I want to be lowering my cost basis. But if I'm right with this wave structure, 1, 2, 3, 4, 5, something like that, where it's like, as long as I can protect my downside, this should be something I can sacrifice for that put protection to get up into my fifth wave completion, which is around $55 to $56 for me. Okay. All right. Hope that makes sense. Okay, so I just want to, look, I'm going to do a shameless plug for my daily profit room because, look, I'm doing it for everybody. It's free. It's silly not to join. If you like these final hour sessions and you're learning a lot, there's no reason that you shouldn't be in my daily profit room every single morning as well. Okay, I had some members this morning. I just continue. It's 2 days in, right? And so I continue to get really strong feedback. You're learning a lot. There's good timeless lessons. We'll keep doing that. It's about building a big community of like-minded traders that just want to trade well. There's a lot of ways to do it. Um, I have adopted so many strategies over the years. I have thrown away a bunch of strategies that I don't really love, and I have kind of my arsenal is probably about 10 strategies deep, but very effective strategies that allow me to see things I've experienced in the markets for 20 plus years. Symmetry, measurements, technicals, supply and demand, support resistance, and then learning the options market and doing a lot with income trading and understanding like something like this risk graph, understanding how these trades play out from start to finish, maxing upside or limiting downside, and just understanding the pros and cons of every trade I take. That's thoughtful trading, you know. And I think it's silly if you're not doing that. I also think it's silly if you don't want to protect your portfolio. You talk about compounding gains and real returns. Look, everyone loves making money in a bull market, right? If you're in a bull market, everybody typically makes money, as you should. It's not that hard. Okay. Where traders really get like where I separate myself from the general trader, right, is when we have sideways or down markets, I can still weather that storm. So my performance might be this. My performance might be up in a bull market and still grinding through a sideways or bear market. And then the next bull market, whenever that happens, 6 months later, 3 months later, 12 months later, 24 months later, then I get another good run. So after, if this is, I'll put the black line would be like kind of the average trader, or I should say average investor, right? Because if you're just exposed, if you're in a 401k plan and you have targeted funds, you're exposed to the markets. You have, exposure to the Mag 7, exposure to the indexes, whether it's all US, non-US, bonds, stocks, it doesn't matter. Average investor in some way, shape, or form, the rising tide raises all ships, right? So it's not that hard to make money in a bull market. The big difference for me is I can separate myself pretty well with, active management. This is my style. So I don't care if the markets are going to go up, down, or sideways. I'm going to do my best to do the math, define my risk, and trade lots and lots and lots of trades, lots of base hits. Because when the market does take this downturn, inevitably, it's going to happen, right? We go into a downturn, and let's say this is a 20% pullback. Well, a lot of traders will freak out. They're over leveraged, they're overexposed, and they end up having to dump positions, lose on their gains, fear that the market's never going to turn up again, and so they then wait this out. And maybe it's 6 months later, maybe it's 12 months later, maybe it's 2 years later, and they get back to this level. And so just after like a 1, 2, 3 year cycle, I could be way further ahead than the average investor. And so there's my alpha, there's my net gain, there's my return, there's how I can compound my gains because I don't I don't allow the market to take me down with it. I try not to. Obviously, I can't prevent full drawdowns. I can't prevent the market from taking down some of my gains, but I also have a plan B and a plan C and a plan D and ways to work through my positions. I can repair positions that are crappy, right? So options truly are a great way to do it. And again, I had traders that asked me this morning, I'm new to stocks, I'm new to options. What can I do? I try to build enough education out there that keeps it very easy to follow. So I'll just give you the rundown. I'll just do this really quickly. I have a list of all my services here, and I'm going to put this in blue. Okay, so daily profit play is actually, I have it right here. I'll just go through this. So daily profit play is daily income on the indexes. That's it. We trade a variety of strategies. I'll teach you all that in the master classes, but I'm looking at day trade, 0 DTE, maybe 0 to 1 DTE. We have sprinkled in like 45 to 60 DTE with good reason. Depends on volatility. But for the most part, we're day trading, and I'm totally good with that. Rumor has it that the pattern day trading rule is up for debate and possibly something that's going to be removed in the U.S., which I think would be fantastic for the trading community. You can trade futures with no pattern day trading. You can trade 100 times a day if you want to in futures. You can trade 100 times a day in forex. It is crazy that the market, the rules and the regulations are like, yeah, these traders that have less than 25K in margin accounts, we're going to restrict them to 3 trades a week. The amount of retail volume is just growing exponentially. Like, if traders want to trade, give them a chance to trade. So anyway, I think if it goes away, that'd be a huge win for the trading community. But daily profit play is daily income on the indexes. Waterfall income is weekly and monthly income. It's a swing strategy based on dollar cost averaging, and we use options so we can leverage and use way less capital up front. Newsbreakers. This is hot and heavy this week because we have some major earnings this week and next week between Mag 7 and high flying stocks. So I'll price this out. I'm actually going to do this tomorrow in my daily profit play room. There's a couple trades I want to look at. And also, I'm going to take a look at a watch list with my pinch point scanner. Double up alerts, I'm only looking at big outlier levels to then go after high reward to risk. Pinch point scanner is a full service scanner that gives you algo generated trade ideas as well as expected moves, option criteria, and trades that are basically primed to move. So of 9,500 stocks, I can find 10, 15, 20 that are actionable. I just go into the option chain, price them out, see what fits. We've had 10 winners and 2 losers in the last like 3 or 4 weeks of this service. So it just finds me great trades. It's that simple. Crash Insurance Masterclass. This is a way to cheaply and cost effectively manage risk and protect your portfolio. We actually took a trade yesterday during the session. If you watched my live session yesterday at 3 p.m., I took a trade on MES. I had some traders ask me, Chris, I can't trade futures. What else can I trade? XSP. XSP is the mini SPX. You can trade that as well. I think we're going to have a pullback. I think if you go out to end of September or into October, I think this market's going to pull back probably somewhere between 4, 5, 6%, maybe more. But I think that's on the low end. We should see about a 4 to 6% correction in the markets. Just pulling back to a 50-day moving average, just pulling back to like maybe a 100 to 200-day moving average. Nothing crazy, just a little bit of a flush. And that's what I'm saying. Watch the VIX, because if the VIX gets above 19 or 20, that vol suppression is going to be removed, and we'll go from 20 to 25 or 25 to 30. And you got to be careful, because I don't want to be short the VIX at that point. I want to see if this thing can flush. The VIX can run up to like 30, maybe. I'll start selling more premium. But it's very cost effective. I'm risking $250 to make potentially almost $2,500 on the trade. So the way I'm going to play that is, if my $250 risk can pay me $500 profit, $750 profit, $1,000 profit, I do that across the board, and my portfolio is going to be up an extra $15,000 to $20,000 by helping navigate some of the drawdown. Okay. Next up, practical options. I get this a lot too. What's the best way to get started? I actually built this last year. I have a quick course and I have a full course, $27 and $497. All I'm doing with these courses is I built this for my nephews. They're 17 and 19 years old. I built this for them. Like, I'm trying to teach as if you know nothing about the stock market, you know nothing about the options market. I'm trying to make this very, very straightforward. Okay. If you learn enough terminology, strategy names, you learn enough about the options chain where you can place a trade with confidence, whether it's a debit or credit, understand your break-even levels. That's what I'm teaching here. You know enough to trade the market up, down, sideways. You're in good shape, because now you can position your portfolio. Now you can give yourself a directional bias. Now you can trade the market neutral or trade the market with a bullish or bearish bias. Okay. So like I said, there's a quick course that's $27, and there's an upgrade to that. If you want to go full course, you can go $497. Practical options full course, by the way, is is also included if you purchase any of my services here. You can purchase any of my services and upgrade to lifetime of that service, and I will give you my practical options for free. So I'll include that $497 bonus course included with any lifetime upgrade. Cool. All right, and then Project Options Edge is probably my more advanced service where I basically trade how I manage my portfolios. I'll do whatever I want. So nobody can complain about, I've never seen the strategy before, Chris. Yep, I'll teach you. I'll show you. This is what I'm doing. So I give all the details and I run that through a Telegram service and alert service. But it's a lot of strategies. It's like all my core strategies I like to trade, up, down, sideways, just trying to make some money. Okay. All right. Is that good? Yep, Lee, you got the answer from Sam. 9 a.m. Good stuff. All right, can we go back to look at natural gas? Yeah, we can look at that tomorrow, ADP, or I'm sorry, Sam. Yeah, so watch this Wednesday. Let's go to natural gas. We'll take a look at UNG. That's kind of what I'm focused on. I have a diagonal spread in this one. I've lowered my call side on the diagonal spread. So now my call is a 1650 call, which lowered my price. I have a 5 by 19, no, I'm sorry, 5 by 1650. So that gives me potentially $11.50 a profit, but my debit's only $11 or $9.20. So if I get price called away up above 1650, I'm going to make $2.30 per contract. And right now I have like I think 20 contracts exposed. So I'm really trying to turn this into an income trade. If I wanted to go long, UNG, I wouldn't mind just buying UNG. Right? If I bought this thing at like, I mean, you could honestly like buy it now and take your chances. But I'd love to kind of, if I put like $1,000 here and $1,000 here, I would like this to go up. But obviously, it's like, what is the reason that I think we're just trying to find like a bigger trough here. If I go to the higher time frame of natural gas, okay, the one scary thing about this is why has it not gone up? Look at this thing. This has been a straight bear market. So I'm a little careful on like, oh, look at what a great price. This thing could go to zero, right? And this thing could go like to the single digits and just be a waste. So I don't want to get too hooked on this trade. But what I've done is I went out to January 2027, so I give myself a lot of time. If I'm right in the next year and a half, I get a chance to make some money on this trade. So I'm just trying to turn it into an income trade. Fair? All right, we'll take a look at that tomorrow for Watch This Wednesday. And also for Watch This Wednesday, we can go into my pinch point scanner, which looks something like this. And I'll show this tomorrow during my daily profit room. I'm going into pinch point scanner. Let's see what this opens up. Move this aside. I'll let that open up first. Okay, we're trading at 6314. Let me see here. I'm going to check this one here for 905. That'd be up another $100 right now. I mean, that's a pretty good pin. I pinned this thing around 63.15. That was my trade. Right now it's trading for about $8. So that $13 credit's now at $500. Not bad. Had I stuck it out for another, 20, 30 minutes or so. But you never know. I mean, the price could have also dropped to 63.10 and I'd be taking on some heat. So I don't want to be too cute. That's why I took the $390 winner, $395 winner. It's up another, $100 or so. But I also got to the trade with a net gain, and that's all I'm trying to do. I'm trying to get my pinch point up. Let's see. All right, what else do we have here? Apparently fake reports going on that Jay Powell resigned. That's not true. Reports that Ozzy Osbourne has died are true. Yep. So Ozzy Osbourne, the great Black Sabbath lead singer and lead, did pass away. Look at this crap. I mean, this is why you got to be careful on social, right? Fake news from Jerome Powell. Didn't cause the market to do anything, but people are trying. Crazy stuff. All right, what else we have going on? Good, 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 good. Okay. Why is Netflix down? Okay, so going back to my thumbnail today, fading earnings strength. I think the safest play over the next 2, 4, 6, 8 weeks is if we see moves up to the expected levels in earnings, I want to fade that move. I am pretty convinced that, and again, this is risk defined, so I'm not going to lose more than a couple $100 if I'm wrong. But if I'm right on some of these moves, I want to fade these earnings reports. I don't care if Mag 7 comes out screaming with earnings. I think this market needs a correction, period. And in order to do that, I will show you an example. We've got about 50 minutes left. I'll talk more about this in my profit panel tomorrow at 11. I'll talk about this more tomorrow in my daily profit room at 9 a.m. We have Tesla on Wednesday afternoon after the close. We have Google after the close. I'm going to look to fade some of these earnings moves because I think if we have a pop and then a fade, especially on Mag 7, I'm going to calculate it based on kind of, give me a great fill. I'm going to take on less risk than I get reward potential, and I'm going to go to the high end of these trades. So if I'm going to lose, it's going to be way less than I could potentially make. So I don't mind fading earnings strength. So if we see a stock, for example, that is coming up with earnings, and we'll just use Tesla as an example here. So I'll go Tesla, which has earnings Wednesday after close. Tesla's trading at 332. Okay. Look, even if Tesla has a huge move, if Tesla rips up here on a huge move, I'm going to fade that move over probably a 2 to 3 week window. Okay. If we go AVGO, which has been running like crazy, it finally turned. I needed this trade last week, but I didn't get it. Okay. Netflix had earnings. It's still fading. This has been a rip of a move. So it doesn't surprise me that some of this is just taking some profit, selling some covered calls. There's no more buying at these crazy highs right now. Okay. Let's go to Meta. Meta has come down off the recent highs. Microsoft has come down off the recent highs. Amazon has come down off the recent highs. Apple, which is not even close to all-time highs, but Apple's sitting at 214. Apple has earnings next week, not this week. What about NVIDIA? NVIDIA's down. It's actually in bright red today. NVIDIA had a big fat candle. This is from 174 down to 165. That's a $9 move on NVIDIA. That's not nothing. Okay. Achieved the status of the world's most valuable company when it hit 4 trillion. Substantial capitalization growth alongside other leading. First company surpassed 4 trillion. Yes. I mean, so nobody really knows why it's down today. I don't really care. It probably just has to be. Why? It's overbought with divergence. It's technical. Give it a chance. So anyway, do I like NVIDIA? Of course I do. But not at all-time freaking highs, not at a 100% gain. I can't justify buying shares. So I will wait for a pullback. So what I'm saying is let's go to Tesla. And right now Tesla is looking for this. It is pretty volatile. It's pretty earnings sensitive. So Tesla average earnings, we're looking at possibly about a 12 to 13% move on average, about a 13% move. Okay, so 13% times the current price is 332.80. So I'm looking at about a $43 move on Tesla. So if we go from 332 up to 370, I'll just do the math. So $43 plus the underlying 332.85. So about 376. So I'm gonna this, and again, I'll price this out tomorrow during live sessions, but I think we can fade this. I mean, if we go up on Tesla, I wouldn't mind getting price out to like August 15th or even later. It's like August 15th, August 29th. Can we stay below? If I've got a calculated move around 376, that's out 38 days, which is actually pretty far. I could probably fade that a little bit lesser as far as the duration, but give this market enough time to just lull, go sideways, fade, do anything, right? So I go out to this last part of August, and maybe that's enough. So if we push all the way up towards like 375 by 380, this trade's offering over $1 credit right now. I'm still not going to take that trade at $1. What I'd like to do is take this trade for $3, okay, or $3.50, and only risk $150 on the trade. So if I'm right, I have the potential to make 350. If I'm wrong, I'm only risking 150. And Tesla could go to 400. I'll still get filled for 350, maybe more. Maybe actually if it gapped higher, I could get filled at a better credit, which gives me even less risk. Okay, so I'm looking to fade some of these earnings plays if they pop to the upside. Now, there is also a chance that price doesn't go anywhere and I don't get filled on these trades. But to me, this is the safer way to fade what could be a strong pop, and then the market fades it back and fills some gaps. Okay? Because if the broader market goes down, I don't care what's up in earnings. I don't care what's up post earnings. It's probably going to fall and fade and fill some gaps. So what I'm going to look to do is use the math, use the previous earnings history, go back, 10, 12, 15 earnings prints, see what the averages are, and then look to do a simple credit spread that gives me more reward than risk and try to manage that trade. Okay, we did it in newsbreakers last week. I didn't have a single trade fill because we didn't have any pops to the upside. JPM didn't really pop. Citi didn't really pop. Goldman Sachs didn't really pop, right? Some of these faded to the downside, and I didn't get the trade that I wanted. Netflix, I tried to get a fill, didn't fill because it fell, right? It's okay if I place a trade, don't get filled, it's no big deal, right? But that's what I'm going to do. So that's why I want to trade it. That's how I'm going to try to trade it. So I'll write this one down. Tesla looking at the 375 by 380. And that'd be a bear call spread. I'll talk about that more tomorrow in session. So $3 to $3.50 credit. See if that takes. Okay, really quickly back to my SPX trade. This 905 is now trading at 780. So another 120 bucks as I got out of the trade earlier this afternoon. And maybe this thing does pin. Maybe this thing pins like right at 614. I called that level based on some of these technicals that I have. I mean, this was my high volatility level right here. So the nice thing is I avoided the dead zone in my trade from Friday, and we were able to pin this thing right around the HVL level, which was freaking sweet. So between this, I should have done a 6310 by 15. That'd be like spot on right now, but I did the 15 by 20. So I was off a little bit on the 5-point window, but that 10 to 15 looks pretty darn good coming to these final 10 minutes. So either way, I'm happy. Making about 400 bucks on the trade today. Pretty happy. Okay, been trading Tesla daily. Good. What are you doing on that, Sam? If you're trading it every day, what are you doing? You don't have options every day. You only have weekly expirations. So what are you doing? Are you just buying and closing, selling and closing? Are you actually like trading on margin to buy and sell shares and dump them? Short-term stuff. Agree. Tesla's in for a 13 to 20% sales reductions earnings. Well, I mean, remember though, like I'm not calling the top on Tesla. I mean, one thing that if you want to give this company a lot of credit for the future is if I think there's a company that's going to go futuristic, humanoids, no human labor, super profitable, high margins, robo taxis, better deliveries worldwide, probably Tesla. And it's also an energy play. It's energy, it's AI, it's humanoids. It's like this whole reshaping of the labor market. I think Tesla is going to be at the forefront of that. So I don't want to fade that potential profitability, but obviously if they keep coming in with terrible deliveries across the globe and China is heavily competing in the EV space right now, Tesla's not the only game in town. And they also, I mean, price to book is pretty expensive. Price to sales is pretty expensive. Price to earnings is pretty expensive. And I also think that they make a mediocre car. So it's not a car trade for me. It's not an automaker trade for me. This is a energy, AI, future, automation, driverless vehicles, humanoid robots, full assembly lines that are zero human effort. That's what Tesla is to me. So, I mean, what I'm doing is I bought some shares. I actually owned some shares when this thing was down into the 220s, and I still own the shares. I've lowered my cost basis. I'm just selling calls every couple of weeks. So I've lowered my cost basis by probably $60 since the lows in April. So I'm just going to continue to do that, lower my cost basis, chip away at it, generate more income. Okay. Model Q rumors apparently right. Okay, 50 shares at a time. Gotcha. Yeah, good, man. Dude, whatever works. You do something that makes you money. Whatever works. You're not going to get any judgment from me. I'm all about traders just finding ways to make money. When it comes to 3M, would you invest in the company considering earnings beat estimates? I don't know. We're at 151. I actually looked at a trade on 3M not too long ago. I was looking at like this 125, 120 area. There is a pretty big pocket down here between 120 and 110. Let me check the snowflake analysis here. So MMM. I might actually have a pending order in this. I'm not sure. Let's see. What do we do on MMM? So I have MMM in pinch point, or did it not fill? The heck? I was trying to do a bear call spread. Okay. So I tried to do a bear call spread at the high, 164. I think this is an earnings play. So post earnings, I was looking for this thing to go up into the 170s based on the expected move. It didn't get there. So this has been a pullback. Now, if I like MMM enough, here is the snowflake analysis. It's okay. I've certainly seen better. I've seen a lot more green and a lot more width on the snowflake analysis. Debt is not well covered. Non-cash earnings, dividend is not well covered by cash flows, but earnings forecast to grow. That's good. Earnings have been growing. That's good. Trading way below discounted cash flow fair value. That's good. Price to earnings, price to sales, reasonable, not super cheap, right? Price to earnings at 20.7. Fair value at 180. We're trading at 151 right now. Again, there's some upside potential. If I were to position myself on 3M, let me check the volatility in this right now. It's an 8.4. That IV rank is garbage. So I'm probably not going to touch this trade because I don't get the premium that I want. But I'd look at like maybe a 120, maybe a 105. So here's what I would consider. We got about 6 minutes before the close here. If I went out to December or January, look, staples haven't been super awesome, right? Staples have been okay, but tech has been climbing, utilities have been climbing, financials doing well, and what else? Industrials doing well. But if you look at the sectors individually, you look at what stocks make them up. I mean, Uber is part of industrials, Caterpillar, Boeing, Lockheed Martin, Raytheon, all part of industrials. That's like aerospace and defense. And then throw in Uber. What the hell is that? I don't know how that fits in that category as an industrial, but Uber's in the industrial sector for whatever reason. I don't know. It's weird. But nevertheless, those are the bigger weightings that have been carrying that sector higher and be one of the better performers at double digits this year. So if I go back to triple M or 3M, if I look at December, January, I wouldn't mind owning some shares, this kind of 120 zone. If I did the 125 by 120, okay, so I could turn this into an income trade. It would only set me back about $1,250 in buying power on my margin accounts. I have a bit of a buffer here. I would own the shares at like 115, which is only about a 8% chance of assignment, which isn't bad. So I'd actually own the shares around 114 if I'm right. But if it just stays where it is and 3M shows some resiliency, then we maybe find some support here in all these moving averages and go higher. But 120, I think, is a pretty easy repair. So as an income trade, it's not a bad trade, but I'd have to be willing to take the trade. This is going to be one for my project options edge service where I'm willing to use my capital and own the shares. So I think this is a better trade if I went out here, or if we get into 2026, I might go out a little bit longer. Let's go out to next summer. So if I went to June of next year, okay, and I look at the 100, that way we can fill this gap. I'd own this thing at like the 110 by 105. I can probably get a similar trade. So if I buy the 110, sell the 105, I get $2 of income. I'm going out 330 days, but the odds are if we go up on this price, this 206 becomes, 50 cents debit, 40 cents debit, 30 cents debit, and I just keep the income. It also gives me a better break-even price. If I were to take some shares, I'd own 3M at, $100. So I get a pretty substantial discount. We're also not at all-time highs, not even close. So if there's a chance that this is going to climb to all-time highs or climb to all-time highs, then my ratio spread that's here, I get $200 of income. Okay. I actually do like this trade. So I think we have support. We just keep going up and up and up and up and up, and we grind higher. And this $200 fades to 50 cents, 40 cents, 30 cents, and I just turned it into an income trade. And if I did that across the board, I'd have 9 accounts. It's going to make me about $1,800, and I can just move the needle. Little base hit, $1,800. Not bad. So can I get these trades in? I'm going to try to get this trade for maybe a 210 fill. Try to get these filled really quickly. So 210 is not filling. Let me try 205. Well, that mid price just changed dramatically on me. I'm going to try to get $200 on the trade. Not filling. All right, I'm going to cancel it. I'll come back and revisit this one tomorrow. It's probably just late in the day. I'm going to try 3M tomorrow. So Tesla there, MMM, maybe a June. 26 ratio. That was the one. What did I just cancel? The 110 by 105. All right, I'll revisit that one tomorrow. Okay, price is at 63.15. That butterfly, iron butterfly. I'm just curious on how the day ended. Right now, that 905 is trading for 570, under $6. That gives me about $700 of profit on that iron butterfly. Again, if I let it cash settle. We still have the final minute here, but it is pretty perfect. Now it's trading over $6. Like that's really slippery. But if I could close this out right now at $6, I'd be happy. That would be a $700 winner by trapping that price within a 5-point range. So worked out pretty well. And yeah, little data points like high volatility levels and gamma liquidity does help a ton to kind of get a roadmap for the day. So we're trading at 6313. This is now up to 650, so it's obviously price sensitive. Let's see where the day closes in the next 60 seconds or less. We're down to 63.11 right now. Now it's trading for $8, like just like that. I mean, $2-3 slipping right through your fingers these final minutes. Okay, now that's actually more expensive than where I got out of the trade. So again, you had a chance, but that's how slippery it is at the end of the day. So probably best fill would have been about $6, $6.50, giving me about a $550 to $600 winner. I'm happy I took about $400 out of it with, an hour of not even worry about the risk. Okay, Gabriel, what are you talking about? 3M, if they lose the lawsuit, price will definitely drop way below 120. I stand to be corrected on this part. When the lawsuit came out against 3M, share price dropped by 30% alone. Yeah, I mean, honestly, it's funny. I don't even know about the lawsuit. I'm just trading the options chain. So, I mean, look at it this way: 120 on that stock price would be, below the April lows. But if I went out a little bit farther and I said, okay, $100 discounted cash flow still, regardless of the lawsuit, regardless of, look, discounted cash flow has this thing about $180 to $190. So I just see that through this April dip, this stayed pretty resilient. I think it can stay there, and I just look at an income trade. If as long as it stays above 105, I make money. Yep. So we'll see. If I get the trade, I'll tell you this: if I go out to next summer, I'm not taking that trade for less than $200. So because if I'm going to go out and make $150, I can do that for December expiration, not June of 2026. Big difference. Okay. All right. 63.09. I'm just curious where this thing finished. Look at this. This actually finished higher than where I closed out the trade. Crazy slippery that last 3, 4, 5 points of the day. This is down 6 points in the last couple of minutes, which would have been the difference between a $600 or $700 winner to about a $350 winner. So slippery stuff, but all good. Okay. Any other questions? Any other talking points? So here's what I would say. I encourage all of you, if you're watching this live, I'm speaking to you. If you're watching this recording, speaking to you. Every single day, if you'd like to trade with me, you now have the opportunity to trade with me every single morning, 9 a.m. to 11 a.m. Eastern Time. I start this daily profit room every single day. So what I'm going to do is I'm going to post my Telegram in the chat. You can all join. I'm going to post my Discord. You can join. Okay. And this Zoom session that I start every single day, I'm going to try to push this also on YouTube so I can go my Zoom session for this group, and I'll talk to that crowd every day. The YouTube session, if I can push it, I didn't have a chance to push it today for some reason, but if I can push it, it'll be on youtube.com/financial wars. And I'll be live every morning from 9 a.m. to 11 a.m. Okay. Faulty earplugs, poisoning public water supply, PFAS, forever chemicals. Yeah, that's pretty bad. But I'll say this: how about Dow Chemical? How about Dow Inc? That whole PFAS, microplastics, and all that stuff, right? Yeah, Dow has certainly felt the effects of that. Here's one that I'd also be considering. Okay, let's trade the Dow. It's at 20. This is back down to 2020 COVID lows. Okay, let's take a look at Dow. Maybe this is not a space I want to be in. That doesn't look good. Dividend not, a 10% dividend not well covered. Yeah, I wouldn't think so. Earnings are forecast to grow by a ton. That's impressive. But there's a lot of risk here that I see, and this snowflake doesn't look that great. Price to earnings, 71. That's crazy. This stock is down what percent from these highs, this stock is down 60%. I mean, like, what is wrong with this company to have this thing down 60+% and still look like this on the fundamental scale? So, and I'm not saying Dow and 3M are the same thing. Obviously, there's a lot more like consumer staples in 3M, but as far as PFAS and lawsuits, like Dow's in the same category. There is a movie. Is it called like Black River? It's with Mark Ruffalo. It was a true story on like water table poisoning and PFAS and stuff like that. I think it was called Black River. Mark Ruffalo movie on PFAS. Dark Waters. Great movie. True story. DuPont, not Dow. Still, same arena, right? Crazy stuff. And this year it's like if we remove the additives like yellow 5 and all the reds and yellows and all the dyes and like it's garbage what profit has allowed companies to give us and say this is safe for consumption. It's not. It's awful. Like you look at our ingredients on our labels compared to Canada or Europe, it's embarrassing what we're putting in our bodies. Anyway, another conversation. Yep. Forever, yeah, PFAS. I mean, yeah, everything for like the nonstick pans, but it was a wartime thing, right? Wasn't it built for like it was put on tanks? It was put on armored vehicles back in the day, and it's like, yeah, we can still use this because we have a ton of it. So what do we do in excess? We put it in our food system. Line our pipes with it that we pump water through. So yeah, it's crazy stuff. So all right, I'll let you go for today. Here's what I'm gonna do. Before I go, I'm gonna post this for my Telegram. So if you want to join my Telegram, it is right here. Chris Pulver Telegram. There it is. If you want to join my Discord, I'm going to post this link for 30 minutes. This is good for 30 minutes. Chris Pulver Trading Discord. There we go. And the daily profit room, 9 a.m. Eastern Time, Monday to Friday. Okay. And that will be on Zoom, as well as I need to verify this, but I'm trying to get it pushed out on youtube.com/financial wars. Okay, and that way it is free to join, free to check out. Yes, I have services. Yes, I have alerts. Yes, I have memberships. That's not free. My time isn't free. My trades aren't free, but there's a lot of ideas to help you generate the knowledge and the education to be a better trader. And if you like the way that I do trade, I'll share those trade ideas. Okay. Where are you posting screenshots and notes? If I show these in class, you can just take a screenshot of them, Sam. So like this one here, I have the screenshot. I've saved it. This one from Monday, I saved it. So you can take a screenshot of that, and Zoom, you can just do like if you use the snipping tool or snag it, or you do a print screen, you can do that as well with what you're watching. But I have those saved. So all my little lessons that we have in the mornings, we'll save those. Cool. All right. Good stuff. Anything else for today? If not, I will let you go. Thanks for being with me. We'll come back and do it again tomorrow. Kindly hit the thumbs up button for me if you're watching this live or watching the recording. That helps support the channel. We are well on our way to hopefully 10,000 subscribers here. Got to be close. The YouTube channel's been live for the last couple of years. We are at almost 9.5. So over 1,000 videos. I'm live every single day. I don't know what it is about the YouTube algorithm that you just can't quite hack to make this thing more popular, but it's a passion project, and it's a slow growth. But eventually that slow growth at 10K, 15K, 20K starts to take off, and I'm just gonna keep plugging away and doing my thing. I'm in the markets every day. It's easy to broadcast this stuff. It's easy to talk through it. Cool. All right, thanks. All right, buddy. Appreciate you being here. Thumbs up button for me, please. Support the channel and the content, and let's come back and do it again tomorrow. Daily Profit Room. Join the Telegram. Okay, link will be posted here in the morning. 9 a.m. we'll start. We'll be live for a couple of hours. I also jump into a profit panel session at 11 a.m. and collaborate with a couple others. I think Alex Reed and Kane Shea will be on with me tomorrow, and then we'll do the final hour in the afternoon. Good stuff. All right. I'll see you in the morning. Thanks. Bye.